Solana or Ethereum? Heading into 2025, it's not really about picking a winner anymore. It's more about choosing the right tool for the job. Are you building for payments, DeFi, or maybe some consumer apps? The chain you pick, well, it's going to have a huge impact. So let's dive into the playbook that'll help you make that call.
So that's the big question we're tackling today. Which one of these massive ecosystems is the right fit for what you need to do?
And just a quick heads up, this is all for educational purposes. It's not financial advice.
All right, let's get right to it. The entire debate really boils down to one massive difference in how they're designed. You can think of Solana kind of like a sleek, all-in-one sports car built for pure performance. Ethereum, on the other hand, it's more like a super secure, customizable truck. You can attach different trailers or layers to do different jobs. Now, I know monolithic and modular can sound like a bunch of tech jargon. That's why I've brought in our analysts to kind of break down what these terms actually mean. So what's the real story here? Yeah, it really all comes down to a fundamental trade-off in their design philosophy. Solana basically puts everything onto one super fast chain. It's all about prioritizing speed and low latency. Ethereum takes a different approach. It focuses on insane security on its main layer, the L1, and then it uses separate layers, which we call L2s, for most of the user activity. This gives it a ton of flexibility.
So a monolithic chain, what is that really? Just imagine a single high-performance engine that has to do everything. Processing transactions, storing data, the whole shebang. That's the Solana approach, and it's built for just incredible speed. A modular stack, on the other hand, is more like a team of specialists. You've got Ethereum's main layer, the L1, and that's your security expert. But for speed and scale, it offloads the work to specialized layer 2s, or rollups.
Speaking of smart decisions, smart investing always starts with better information. So go ahead and subscribe to Smart Money to stay ahead of the curve.
That's a really great breakdown of the tech under the hood. But let's get practical. What does this all feel like for the average person using it? Let's talk about the stuff that really matters. Speed, fees, and, how quickly your transaction actually goes through. Okay, so this table really lays it all out. When the network is running normally, Solana's famous for its super, super low fees and almost instant confirmations. Now, Ethereum's main layer can definitely be slower and pricier, which is exactly why most people are on its L2s. And those L2s, they also have really low fees and fast confirmations, so the gap between them isn't always as big as you might think. Okay, so both can be fast and pretty cheap to use, but what's going on under the hood? What are the trade-offs we're making when it comes to security and just, reliability? Right, so they just manage risk in totally different ways. Ethereum has this massive, diverse set of validators and clients, which makes its main layer incredibly secure. The L2s that sit on top are also secure, but they bring their own operational things to think about, like sequencers and bridges. Solana, on the other hand, is constantly shipping improvements to its performance and reliability, and new clients are making it more and more resilient. And look, let's be real for a second. No system is perfect. Outages, bugs, bridge hacks, these risks exist everywhere. The bottom line is you have to be smart about how you operate, and probably diversify your assets, no matter which ecosystem you end up choosing. That is such a crucial point to remember. Okay, so now let's see how these different design choices actually play out in the real world. Where does Solana really shine, and where does Ethereum have the edge? This is really Solana's sweet spot right here. Those low fees and crazy fast transaction times make it pretty much ideal for things like payments and consumer apps. We're talking social media or maybe high-volume NFT mints, where literally every penny and every second counts. But when you start talking about high-value DeFi and institutional use cases, Ethereum's ecosystem has a really clear advantage. Its L2s can tap into these deep pools of money and have years of development and tooling behind them. Plus, for those huge transactions, the rock-solid security of Ethereum's base layer is a massive, massive selling point. Okay, so that's the lay of the land today, but we all know that in crypto, things can change in the blink of an eye. So what could the next, say, 6 to 12 months actually look like for this whole rivalry? All right, so we're looking at 3 potential futures here. The most likely scenario, which we're giving a 50% chance, is what we call a multi-chain reality, where both Solana and Ethereum just keep thriving in their own lanes. Then there's a 30% chance of a Solana consumer surge and a 20% chance of L2 dominance, which would really cement Ethereum's lead. And for each one of these scenarios, there's a key metric you'll want to watch. In that multi-chain world, it's all about picking the right tool for the job. If Solana really takes off with consumers, we'll be watching active user growth like a hawk. And if Ethereum's L2s dominate, well, you just follow the money. Watch where the liquidity is flowing.
This is a fantastic way to frame the future of the market. But let's bring it back down to earth, back to the present. What's a simple, practical playbook our viewers can use right now to navigate this whole complex landscape? It's a pretty simple three-step plan. First, just start with the job. What are you actually trying to build? Is it a low-cost consumer app or a high-value DeFi protocol? Second, go measure the real user experience. Actually test it out. Check the fees, the transaction times, the reliability. And third, and this is crucial, protect your downside. Diversify your assets, use secure storage. Just be smart about your decisions. At the end of the day, it really just boils down to this. Different designs have different strengths. Your job is to pick the tool that actually fits the job you need to do. And that's really the bottom line, isn't it? So we'll leave you with this question to think about. What are you building next, and which chain is going to be the one to help you get there? Let us know what you think down in the comments.